All right, so let's do a quick review. Today is Friday, February the 6th. Just a quick recap of what happened today in the market, starting with futures S&P 500. I did say that I either expected to go sideways or most likely to have some kind of a bounce. I'm going to be honest with you guys. I'm going to be fair. I did expect the bounce to only come all the way to here. I did not expect it to go all the way there. So I thought from here, from 6,780 or so, I was thinking it's only going to go all the way to here to 6,880. It did overshoot by going to all the way to 6,980. 965, which is kind of unexpected. I'm not gonna lie to you. Let's try to find out what's the reason behind it. So I see a lot of support, a lot of resistance, sorry, here, and it was obviously tested once on the way down when we were coming down all the way here. So that's first touch, and then was tested again right before the open right here. So that's number 2. And then on the third one, we did break it. And if you were trading on Friday, you would be able to catch it right at the opening hour. Once it let's drop down to a lower time frame. Once it did cross above the level, it gave you an opportunity to get long. Or also, if you were short from here expecting this move, it did give you an opportunity to close your shorts right here. If you were short on this way, on this candle, once it got here, came here, if you were patient, it gave you an opportunity to close your shorts. Or if you weren't shorting from here expecting this resistance to work the way it would work, unless we would have gotten all the tests of this resistance right here, then you would have gotten long from here and just take it to the next level. Now, with all of this being said, you also have to take into account that I think that was Thursday or Wednesday, I don't remember. I did mention in one of the daily market reviews that this has been tested so many times that next time we would come here, we would just probably go above it, which is exactly what happened. Exactly what happened here. We already tested it so many times that coming here one more time in this fashion, instead of just one sharp candle, which could have resulted in a move down, we're slowly grinding up, and that led to this. So what's the main takeaway right here is that make sure to always, while you're on the hourly, always account for all the tests that you have. So I would say actually that this is test number 1, this is test number 2 of that. Don't be in the way, or if you are, close once you get here and then open a long, take it here, close the long, realize that it's been tested once, twice, or maybe you could count once and then twice this, and then you wouldn't count this as number 3. But still, it was already tested at least 2 times, whether you count this as 1, this is 2, or this is 1, this as 2. And I will touch upon why this is the zone and this is the test, because I usually do use sort of boxes instead of just straight levels, because it helps me with the understanding that this, even though those wicks did not reach the actual level of 6,930, it still would reach the zone, right? The box, which is, in my opinion, the more accurate way, even though it's very, very, prone to error and everything. But I think it's more accurate way of drawing levels instead of just doing lines. And I think I mentioned when I was starting the YouTube series that I did have some kind of a break from trading, and I was just coming back to it, so I was still drawing the lines, but I will get back to my actual zones, the actual boxes. And with this, you would see that you would get test number 1 inside the zone, then test number 2 right at the zone, and then you come here, and this is, once it's number 3, you don't want to trade it. You do want to trade the first one, you want to trade the second one, you don't want to trade the third one, the fourth one, or even the fifth one if it happens, because most likely it just breaks out or breaks down or whatever it's supposed to be. If it's a resistance, then it breaks out. If it's support, then it breaks down. You get the idea. So anyway, so you could have had that. Now, the thing is, I'm not gonna go ahead and do a plan for Monday. I'm not gonna draw anything just because I'm gonna use this same layout. I'm gonna get rid of the old levels that I had here, the blue lines. I'm gonna get rid of all the drawings, and I'm gonna actually release the educational video on the support and resistance levels, zones, how I draw them, how I look at them, how to actually correctly assess them, and so on and so forth. So I'm not gonna do any forward-looking guidance for Monday. Let's just quickly run over S&P 500. Same but different. So here I was either expecting it to go sideways, that didn't happen, or I was expecting a bounce all the way here. It did overshoot. Same with the futures, didn't have much of a short. I was more on the side with the shorts on this one, but what happened is actually quite similar. Let me just get to extended trading hours. We had a test number 1, test number 2, and then we just shoot up from here, and then you have an opportunity right here at the open to get long all the way to either here if you're more risk averse, or here if you see that this has been tested enough a lot of times. Basically 1, this is maybe 2 because this is after before open, so you would have gotten long here, realizing that this structure is indicating that the level is weak and we are gonna break through. So same thing here. Now let's quickly, no, hold up, I did say I'm not gonna give any guidance because I'm gonna get rid of the levels, but just to run through things here. This is where you would still fade the move, at least for now, even if you were on the side of longs, even if you think that eventually we go higher from here without visiting lows prior to that. This is the place where you would cover your longs, just because it's it's inverse, right? So it's a low volume node, so this is the place where the gap would fill and we're likely to get a opposite move to the opposite side. So yeah, and then just quickly gonna run through, sorry being a bit of chaotic here, but just gonna run through Bitcoin. With Bitcoin, I did have Scenario number 1, where we just go sideways for a few weeks in this range, in the blue range, which is the high volume node from, I believe, 12-month volume profile. Or scenario number 2, just go up here for a swing trade, longer term swing trade, not just a day or two, and then go down. And then I did give, right before ending the video on Thursday, the daily market review, I did give a quick rundown of the things I would expect for Friday, and it would just go up all the way here and then kind of return to the base of the move. And as you can see, we got something along the lines. It did overshoot a little bit. It did go all the way up to 71k. I was expecting it to only last till like 70k or so. And then we did go, after that, we did go down from there a little bit. Not to the base like I expected here, but still. So also not gonna give a further guidance on Bitcoin for now. For Monday, I'm gonna use this for drawing zones for my educational video, and after that maybe I'll do a forward guidance video on Sunday instead. So Saturday I'll do the educational video on the levels, and then Sunday I will resume the daily market review. Again, thank you guys for tuning in, and looking forward to releasing the educational video tomorrow. Thank you.